Be careful. Take your beer goggles off right now, and I need you to listen to this video because you must be careful in this market. I'm expecting the market to be more choppy, and in this video, I'm going to tell you why it's going to be more choppy, what you can do about it, and how to actually take advantage because there will be opportunities in certain pockets of the economy and pockets of the market if you have the right strategy. So look, first thing is first, Moody's on May 16, 2025, Moody's downgraded the US sovereign credit rating from its highest level. Okay, guys, America, the best country in the world, is becoming more risky. It's becoming more unstable. Other countries economically are starting to overpower the US, and we have a lot of debt. So our rating went down from AAA to AA1. This decision was driven by concerns over persistent fiscal deficits, rising national debt, and increasing interest payments. Our government, our country, is in a very heavy deficit. Certain people are getting stupid rich, while many others are struggling. Many people are afraid of losing their job. Even high-end engineers who I talk to, who have software engineering, IT jobs, who get paid a lot of money, are actually very afraid of AI, and they're coming to me and asking me if I can help them replace their income. So right now, even the best and most talented employees are at risk, and this market is going to be very choppy because the best workers are not even secure with a job, and our country has a lot of debt. Moody's highlighted that without effective fiscal reform, the US debt to GDP ratio could escalate to 134% by 2035, up from 98% in 2025 today. So these downgrades reflect growing concerns about the US government fiscal trajectory, including increasing deficits and debt levels, while the immediate market has been relatively chill. So I need you to be very careful because we have some warning signs in the economy, and we have gone through a very big recovery. And now I'm telling you, take the beer goggles off and see the market for what it is, not for how you feel. So if the market's going up, it doesn't mean that you should put all of your money in the market. In fact, right now, it's very important to hedge your positions properly. Actually, yesterday, we've gotten a little bit of a pullback in the market, yet my portfolio is very chill. It is basically at a 0% return for the past week. It's because I'm perfectly hedged right now. I have a lot of hedges in the market, and a hedge is basically me selling options to create income and protect myself. So yesterday, when the market was down, when Palantir was down, when Google was down, when Apple was down, when many of these stocks were down, I really didn't experience any downward pressure. As you can see, my portfolio has been relatively flat the past couple of days. And that's because I'm a little bit skeptical of the market. I think there's a lot of opportunities. I think we're going to be making money. I think 2025 will be a strong year. But in the short term, I am less excited the more the market goes up. When I see stocks hitting all-time highs, okay, and just a couple of months ago, they were hitting peak fear levels, that makes me more reserved, and that makes me look at the strategies that will generate income. By the way, if you haven't watched my 6-hour course, I just released it 3 days ago. You're absolutely crazy if you haven't watched it yet, because that 6-hour course took me 3 months, and it is the most important tools and skills that you need to master option trading. I'm going to have that at the end of the video and also in the description, which I believe is the most important video of this year. If you do anything, you should watch that video to really understand how to take advantage of any market, because I talk about stock selection, I talk about risk management, I talk about a lot of important aspects of trading in the markets and the psychology of taking advantage. Now look, I think only some investors are going to be able to navigate this market. Some investors always make mistakes and they never really get good. And it's because they're really studying the wrong stuff and they have the wrong mindset. This market is going to be choppy, and if you want to take advantage of this market, you need to look at high quality stocks that have good earnings, or stocks that have good valuations. All right, so let me explain to you something. Recently, Target, for example, has gone down a lot, and Target has pretty bad earnings. They had earnings that really disappointed investors. However, the PE ratio is now 10. So what I did in my Discord community is I had sold put options on Target. And the reason is because I sold put options at a level where the PE ratio is under 10. Okay, under 10 is basically as cheap as it really gets. When I was in college, I had a fund manager that came to my class to speak. I was managing funds for my college's endowment, and he came to speak and he said, you really want to look at, he was a value investor, you really want to look at 10 times PE ratios. He only looked at companies that had very cheap PE ratios. And right now, Target is going for a cheap PE ratio. Now, another stock that I actually put out in my challenge, it's too late to join the challenge, it's closed. We ended up selling some put options on American Airlines. So that was my trade on Monday. That trade that I did on Monday was an 11 sell put for this Friday. And although the market has pulled down a bit, my 11 sell put is out of the money. It's at 11. And right now, American Airlines is 11.24. So I'm telling all the challenge members, celebrate, be happy. Because while others are losing money, you're making money. So American Airlines, very interesting stock. NVIDIA also, I think NVIDIA will have stability. I'm not too concerned NVIDIA's stability at all. Now, SoFi, I think it's business as usual. Although the stock market is pulling back a little bit, SoFi is very unlikely to pull back further because the valuation is also cheap. So again, remember, two things. Good valuation, very important because that is the math, that is the financials behind the company. And second of all, looking at a high quality company, a company that can generate income and cash flow even in tough times. So say that AI doubles and all the engineers lose their job, which they're a huge part of the economy because they make a lot of money and they spend a lot of money as well. Which companies will be okay? Will SoFi be okay? Will they still have credit cards and loans? Yes, they will. Right? So you want to look at companies that are going to be resilient in a choppy market. And that's the most important thing because it's not just about making money. It's also about the consistency in your portfolio. So I talked to a guy yesterday. He came in, very good guy. He had $2.7 million. And he basically came in and said, Henry, I want to get to $10 million in 3 to 5 years. And I didn't want to burst his bubble too hard, but I said, look, your portfolio with $2.7 million, and I will help you. We can do the one-on-one coaching. He was interested in my one-on-one coaching. I said, I'll help you make 4% a month. We'll make $100,000 a month. He said, yeah, but I want to get to I want to get to 10 million in 3 to 5 years. I said, look, I don't know if I can do that because the returns of the stock market are 10% on average. Warren Buffett, maybe 20%. I'm aiming for 4% a month. Okay, if you want 5, 6, 7, 8, 10% a month, it's possible in good months, but there's also going to be some choppiness. And just being honest with you, in March I lost money. I told him that. He appreciated the honesty. He said he wants to do one-on-one coaching with me. He just needs to figure out his funds. But I was very direct with him. I cannot grow $2.7 million to $10 million because $2.7 million is a lot of money. You can't risk losing that because that's the money that you need. You can't risk money that you need for money that you want, okay? I'd rather get from $2.7 million to $3.7 million in 5 years and along the way have a lot of cash flow that person spends on their lifestyle because they're retired. He's not working anymore. He had many different careers, but throughout his lifetime. But yeah, it's all about safety and consistency. It's not about chasing the big numbers. And in fact, I don't really work with those type of people because it can be very challenging to take on a person as a client that wants to triple their money within 5 years. There's just kind of the wrong mindset to have. The mindset that you should have is, I want to retire. I need X amount of money. Can we generate that? How close can we get to that? And how do we build to that? And how long will it take to get there, right? So for example, $2.7 million is a big example. I know you watching this video likely don't have that. So let's say that you have $300,000, which is, a much more reasonable, realistic number to kind of start thinking about retirement, getting into that retirement zone. So if you have $300,000, you make 2% a month, right? Or 2% would be on the very beginner side. It would be $6,000 a month, which is pretty good income. Now, if you need $15,000, how do you get there? Well, if you get 3%, it's $9,000. If you get 4%, it's $12,000. You're still not at $15,000 per month. So what you need to do is time to build that 300,000 to 350 to 400, and at 400, all of a sudden, 4% is now above the $15,000 that you're looking to make. So it's all about time, patience, and having the right strategy. If you're losing money and you're following a lot of the BS gurus here on YouTube, many of them who take the content and kind of copy a lot of the similar content to me that don't actually have the results to show. By the way, some people are showing results and they're faking it. They're taking money out and they're putting it in. That's all nonsense, guys. Please, just stay focused and follow the content that I'm making here. Don't get all confused with all the other content out there. Listen to what I'm saying. Use the simple strategies I'm teaching you. Covered calls, sell puts, all of the stuff that I'm putting in the 6-hour course. This is the only video that you need. You don't need to continuously bounce around watching tons of videos. I'm telling you, at the end of this video or in the description, just watch the 6-hour course and focus on a real strategy that produces income and safety and understand risk management. And one thing that I really want to point out in my portfolio, which I am doing, is I'm starting to invest in ETFs. Okay, so my Discord community, what I'm doing is I'm starting to put in money in ETFs that have the right stocks. Okay, not broad ETFs like SPY and QQQ. I'm starting to hone down into sectors that I personally believe in. And in those certain sectors, then I'm still running the simple strategies that I teach. So look, one last thing I want to end with is that Jamie Dimon, the CEO of JP Morgan, he basically warned that the US, they might face stagflation. Okay, this is a situation, stagflation is not good. It is a situation where inflation actually stays high. Inflation, the cost of goods, right? The cost of education, the cost of healthcare, the cost of just buying eggs, meat, dairy, etc., right? All the goods and services that we are typically buying as consumers. Well, those goods may stay high or even increase, so inflation can be high, and at the same time, the economy can slow down, so little to no growth. And actually, I see this happening. I see a lot of people struggling to make money. I have people coming to me every day, and unfortunately, I have to turn some away because some are coming to me with $2,000, $3,000. And as much as I want to help them, I do have a team and I have a company and my coaching service. I can't always help the people with a couple $1,000s. It can be difficult. So I might send them an ebook or something like that. They might email me, which is in the description. I might say, hey, I can't do a whole lot. Here's an ebook. Here's a video. You're going to have to add more money into your account. And it's very challenging. I wish I had a better solution. And that's because the economy is slowing down. Good jobs are hard to come by. And this is an issue that I don't really see a short-term solution to. And what can happen is unemployment can continue to rise with more people losing their jobs and AI automating it, which I think AI is a good thing. I'm personally happy. I don't care. I don't have money issues. But that's me, right? I wish this to be the case for others where they can upgrade their skill sets and make the money to invest it. Because if you don't have money to invest, then my content isn't that useful. You can't really do too much. So it's really a factor: being smart, being skilled, understanding the simple strategies I teach, time, adding money to your portfolio. That's what the doctor ordered, okay? So here's what Jamie Dimon is also worried about. He's worried about the government spending too much money, which obviously they are. I would get into politics if I can have an impact on politics. I can't. Nobody can, okay? When you get into politics, you realize there's a guy above you and above you and above you, and there's a lot of corruption, and that's how the human system is, really. It's who's in power, okay? We can't do a whole lot about it. You can go to Harvard, MBA, and JD, LD, whatever, all the licenses you want, get into politics, and you're going to realize that there's really not much that we can change with physical policy, unfortunately, with a lot of stuff. Like, we see a lot of issues, and this is called tragedy of the commons in economics, right? When anyone, you could look up tragedy of the commons, but essentially it's when people have a free will. Majority of us do have a free will, and you let a cow out on the field and it starts grazing grass, right? Other people let their cows, and all of a sudden there's no more grass to eat because everyone is trying to fight for the resources, right? There's a limited amount of resources. So it's called the tragedy of the commons, where there's really not enough resources to go around, and the people that are smarter, more skilled, and earlier will dominate, right? So, first mover advantage in many ways, and other economic principles that are very interesting to discuss, but I won't bore you or waste your time because I know you're going to click off the video if I go too in detail about that type of stuff, but I may, depending on your guys' comments. So, look, last thing is, the Fed might not be able to fix this easily, so even interest rates may not fix stagflation. So be careful, take the beer goggles off, and learn how to replace your income. Use option trading to grow it. And you must watch my 6-hour course. You're crazy if you don't make time to watch it. You're watching other videos. I want you to get results, so stop feeling like you're doing progress and actually make progress. The link is going to be right here for the video. You don't have to watch all the 6 hours right away. Start watching some of it. Take notes. Don't just watch. You're going to forget. Take notes. I have real examples, real life trades that I made money with. So I'm going to leave that on the screen right now. And in the description as well, I'll have my email if you have any questions. But I'm very excited to help you navigate this choppy market. And I think that there is a lot of opportunities. So nothing to sell in this video, just advice, not from a financial advisor, of course, but tips and insights from someone who's been navigating the market for a long time. Watch the video. See you in the next one.